Hello, stock chart watchers and Decision Point faithful. Today, I'm going to be talking to you about bias assessment. It should be a very interesting show. I'm asked about this very often, about how you can determine the bias, bullish or bearish, of a broad market index, a sector, the gold miners industry group. I have that as well. But you can also use bias assessment to determine whether your stock is in a bear market or a bull market. And that should temper how you trade that stock and what you should look for in terms of upside targets, stop levels, etc. So let's dig in. So bias assessment, yes, that is what we're going to talk about. And as part of that discussion, we'll be talking about participation and, of course, our golden and silver cross indexes. These are exclusive to DecisionPoint and StockCharts. You'll only find them here. And I'll explain a little bit more about those as we progress. But let's go ahead and get right on into it. Lots to cover. All right, so bias assessment. The first thing we need to do is look at participation. What is participation? Participation tells you how many stocks are above the 20-day, 50-day, and 200-day moving averages. So you want to see whether you're getting good participation within a particular index or ETF, not an ETF, a particular index or sector. So this is where you start. You start with participation, seeing what's going on under the surface, or as I often say, under the hood. And currently, just looking at our current chart here, we can see that the bias is almost neutral here. We're almost at that 50, 60% level of stocks above their 20 and 50-day EMAs. We can also see that they are in a declining trend, which is not what you want to see, although it is kind of confirming what's price action has been currently. We are seeing more stocks, though, trending upward with their price above their 200-day EMA. And a reading of about 75% is a fairly bullish reading, and seeing it moving higher, that is a nice long-term bullish participation is what I would look at that as. So here is our participation. So where do we go from here next? Well, we want to go and look at our golden and silver cross indexes. Now, like I said, these are exclusive to DecisionPoint and StockCharts.com. And what these measure, let's start with the golden cross, because I think most people are familiar with what a golden cross and a death cross are. A golden cross is when you have that 50-day EMA cross above the 200-day EMA. That's a golden cross. You can see one right here. That's a death cross when the 50 crosses below the 200-day EMA. So we measure how many stocks within, in this case, the S&P, have their 50-day EMA above their 200-day EMA. And currently we are at a 78% reading, which is a pretty healthy reading. Like I said, I would still consider this bullish for the longer term. And you can see that based on where we are at right now, that is pretty much a bullish reading. We're near the top of the zone where it is. But we are noticing this decline in the Golden Cross Index, and that tells you that more and more stocks are starting to show a bearish bias within the S&P. So now we know what's going on with the Golden Cross. So the Silver Cross Index, what is that? So we call a Silver Cross a 20-day EMA crossover the 50-day EMA. We think of that as a silver cross. Now, we measure how many stocks have a silver cross. How many stocks in the S&P have their 20 above their 50-day EMA? Currently, that is almost at 60%, which is, again, kind of a little bit of a bullish reading, more neutral in my expectations. You know, you can see where it fits on the scale here. And it's really kind of middle of the road for most of the readings that we're seeing. It is rising. It is above its EMA, so that's all good as well. But I can tell you, you can't see it right here, but it is flattened out quite a bit during the trading where we're talking right now, which is on December 17th. So it is rising, which is a good sign, but it's still at kind of a mediocre reading at this point. So now we're familiar, right, with participation, stocks above their 20, 50, and 200-day EMAs. And now we know how many stocks have a 20 above their 50 and how many have a 50 above the 200. So all of this really good information. It's telling us kind of the health of what's going on in the market. But now how do we go in and determine the bias of the S&P in this case? Well, what we're going to do is compare participation to the golden and silver cross indexes. So I have a special chart. This is a chart that I go over every market day in the DecisionPoint alert, which is a product on our website, decisionpoint.com. And so we're going to look now at our bias assessment chart. So you'll notice we have the silver cross index, and then we show the participation between the 20 and 50-day EMAs. So these top three are going to help us determine the short and intermediate term bias of the market. Now over here, we have our golden cross index, again, the amount of stocks with their 50 above their 200-day EMA. And we have the participation in the long term, which is the percent of stocks above their 200-day EMA. So now let's talk bias. How do we determine the bias currently? So what I do is I compare the percentages in participation to the percentage of the silver cross in this case, or the percentage of stocks above their 200. I compare that to the golden cross index. And that will tell me what the bias is. Why is that? Because 20 above the 50. So what does price have to do in order to get a 20-day EMA above its 50-day EMA? It needs to be above both the 20 and 50-day EMA. You're not going to get a positive crossover unless price is above both of them. So that's why we look at the participation under the surface here. It tells us what's going on here in that silver cross index. So in this case, not the best example, but I'm going to show you another example using the NASDAQ, because we also have this information for the NASDAQ. And what we're going to look at here is that comparison. So right now, fewer stocks have their price above their 20 and their 50. So if they don't have their price above the 20 and 50, they can't get a silver cross. That means that this number can't really move to the upside by very much. So in this case, with those percentages being less than the silver cross index, we do have a slight bearish bias, particularly in the intermediate term where we're looking at these two, right? We have a little bit better reading on the stocks above their 20. But I would have to say, if I'm writing about this in my DP alert, I'm looking at this as being a more neutral bias, because these numbers aren't really going to bring this silver cross index down, and it's going to keep it pretty much flat like we have been seeing it. So really our bias in the short and intermediate term here is more neutral. Now, what's going on in the longer term? What's the longer term bias? Well, we do that comparison again. We compare the golden cross index reading to the percent of stocks above their 200-day EMA. How can you get a golden cross? The price needs to be above both the 50 and 200-day EMAs. That's the only way you can get a golden cross. Can't get it if the price is below the 50. That's just not possible. So what we want to see is a comparison again between these two percentages. So we have fewer stocks with the price above the 200-day EMA. That means that this number, the amount of golden crosses, is going to be very difficult to expand that because, again, price needs to be above both the 50 and the 200-day EMAs in order to improve this number. And when you look that only 58% have price above their 50, that tells you that a lot of stocks have a price in between their 50-day and 200-day EMAs, okay? Because we have less than we have above their 200, right? So that means we have more, we have a particularly good chance that we're going to see this number start to turn back down. Currently, it is rising slightly, which is good. And it is in somewhat, it's still in a bullish reading above 70%. So that's good. So it's rising. So in the longer term, the bias would be probably bullish, neutral to bullish. Bullish because it's rising, but a little bit of neutral going on because you have price above, not as many above the 50 and 200-day EMAs. So that kind of is eroding the bullish bias that is showing with this Golden Cross Index. So in this case, we would read the long-term bias as mostly bullish, but somewhat neutral. So I would still consider currently where we're sitting in the market, the long-term bias is still bullish, which makes sense. We're on a very nice long-term rising trend. Intermediate term, we're looking at a reading of 59% for the Silver Cross. And like I said, that's a mediocre reading, so really more neutral. And given these percentages are very close to this reading, it just confirms the neutrality of the short and intermediate terms. Now, when we start to see a lot of deterioration on the percent of stocks above their 20, that is going to make the Silver Cross vulnerable to moving back down. So we do have some vulnerability here, but the reading is mostly neutral. These percentages are about the same as what we're getting on the Silver Cross. So that really sets us up in a more neutral position. All right, so let's start looking at some of the others that we have. One of the chart lists that we have on DecisionPoint.com is the Golden and Silver Cross Index chart list. And within this chart list, I will show you, we have the ability to determine bias on all of these sectors. The gold miners is an industry group that we do cover with the Golden and Silver Cross. We don't do that for other industry groups at this point in time, but we can see gold miners under the hood. We'll be able to determine participation and the bias, and then we can determine the bias on all of these indexes. Well, right now, a lot of people are very interested in what's going on with the NASDAQ because it's correcting more so than the SPY right now. So let's look at those biases. I'm going to take the Zoom thumbnail off because I want to have the labels right here where we can see them. All right. So what do we do first? Silver Cross. Compare the Silver Cross to how many stocks are above their 20 and 50-day EMAs. The Silver Cross is falling. So and it's at a low reading. That's a bearish bias in the intermediate term, just straight out the gate. We already know that fewer stocks have their price, their 20 above their 50. That means that 70% of the stocks in the NASDAQ are correcting, at least in the intermediate term. Now, when we go and compare the percentage of the Silver Cross to the participation above the 20 and 50-day EMAs, notice that we're at 23%. Compare that to the Silver Cross, which is at 29%, and you have a bearish bias in both the short and intermediate terms. So the intermediate term bias is determined by what is going on with the Silver Cross. The short-term bias is determined by what's going on with participation under the surface. So we know that this Silver Cross Index is going to continue lower as long as we have fewer stocks above their 20 and 50-day EMAs. So NASDAQ not looking good in the short and intermediate term. How is it looking in the longer term? Well, just straight off the bat, a 42% reading on the Golden Cross is a negative reading. It's below 50%. We have over 60% of the NASDAQ, about 60%, correcting right now. So this is telling you that your confidence factor on any selection you make to buy in this index, your confidence factor should be much lower because the Golden Cross is at 42%. Now we want to compare the percent of participation above the 200 to the Golden Cross. Notice that that percentage is less than the Golden Cross index. So that confirms the fact that we have a low reading on the Golden Cross, it's in decline, and we have a lower reading on the percent of stocks above their 200 as well as above their 50-day EMA. That tells us that this Golden Cross index will continue lower, and that gives us a very bearish bias in the long term. We don't want to see a long-term bearish bias. That really tells us that we should expect a correction in that particular index. And we've started a correction in the NASDAQ, and based on the participation, the Golden Cross and Silver Cross indexes, we have a bearish bias in the short, in the intermediate term, and in the long term. This tells us possible bear market ahead for the NASDAQ, or at the very least, a correction down to test that 200-day EMA. It's not looking too good, folks. All right, let's look at the NYSE. Actually, let's look at the small caps. How are small caps doing? What is the bias in small caps right now? So Silver Cross at 43%. That's a bearish reading. It's below 60%, but it's not yet oversold. We've seen much lower readings, of course, at the end of the bear market. We had very low readings in 2018, the end of the year correction that we saw. We had much lower readings. I think that's where we're going. But currently it's at 43%, and I would say that that is a mostly bearish bias in the intermediate term. But what's going on in the short term? What's our short-term bias? 29%, 32% of stocks above their 20 and above their 50. Both of these percentages are lower than the Silver Cross. That tells us that we have a bearish bias in the short term as well. Now, what's going on with the bias in the long term for the small caps, the S&P 600? So we can see that the Golden Cross has the percentage much higher, 64%, compared to the 52% with price above their 200. We have almost half of the S&P 600 in correction mode because they don't have price above their 200-day EMA. And based on the Golden Cross, it's a bit higher than the participation, but that tells us that we have a bearish bias in the long term. So while the reading of the Golden Cross might be, neutral at 64%, seeing the damage of participation under the surface tells us that the Golden Cross is going to continue lower, and that gives us a long-term bearish bias. So S&P, we saw the SPY had neutral bias in the short, intermediate term. Long term still looked pretty bullish. NASDAQ, bearish across the board. S&P 600, bearish across the board. When we know that those two indexes are showing a bearish bias, I can guarantee pretty much that we're going to start seeing that bearish bias on the SPY, and that we will start to see this market continue its correction to the downside. Now let's go ahead and look at some of these sectors. Let's go ahead, and I was liking healthcare. So let's look at the healthcare Golden and Silver Cross. And let's see, so 50% of, we have a Silver Cross index reading of 50%. That's about as neutral as you can get. And it's rising. So it's neutral. The Silver Cross is rising for healthcare, so that's looking pretty good. And the Golden Cross is at 70%. That's a healthy reading, and it has started to turn up. But what's going on under the surface? So you can see that participation numbers of stocks above their 20 and 50 have percentages that are above the Silver Cross. So that tells us that in the short term in healthcare, we have a bullish bias. In the short term and in the intermediate term, we have the Silver Cross rising, it's at 50%, and we have 56% above their 50. That tells me the intermediate term bias is also mostly, well, it's somewhat bullish. Let's put it somewhat bullish. What's going on with the Golden Cross on healthcare? We see it rising, it's at 70%, and notice that the percentages are exactly alike. So that tells you that of those 70.31% that have their price above their 200, they also have their price above their 50-day EMA because we have that Golden Cross set up. But as soon as we start losing those with their price above their 200, we can very much expect to see that this number may or may not deteriorate. But I would say the long-term bias is still very neutral for healthcare. So ultimately, short-term, intermediate-term bias is looking good for healthcare, but in the longer term, mostly neutral. Let's look at comm services. This sector has been really beat down. It started to correct back in September at the beginning, and it really has just gotten worse and worse as we've gone along. Price ended up below the 200, and now it is starting to rally. We are starting to see a short-term rising trend, but we aren't getting above that 200-day EMA. So what is the bias on comm services? Are we looking, is it going to start doing better or is it going to start doing worse? Silver Cross Index reading is still technically in decline, and it is at about 11%. That tells me there is a bearish bias in the intermediate term, just right out the gate because of the declining Silver Cross and the very low percentage. However, that reading is oversold. We can see that's getting very close to bear market lows on the Silver Cross. But does it have the ability to improve itself? Well, when I look at the participation numbers here under the surface, we have higher percentages and they are rising in participation, higher than the SCI. That gives us a bullish bias in the short term. And even in the intermediate term, we see a lot more stocks above their 50-day EMA than we have on the Silver Cross. So this tells me that there is a bullish bias in comm services in the short and intermediate term. What about the longer term? Well, we see the Golden Cross is rising. Oops, sorry, Golden Cross up here is beginning to rise. It's at 41%, which is still a bearish reading for the longer term. And we see as far as percent of stocks above their 200, it is only at 33%. So while we are seeing a nice bullish bias coming in the short term, we still have a bearish bias in the long term. So if you were to jump into this sector, trying to get in on a possible bottom, moving up, there is a little bit more of a higher confidence level that you will get that breakout. But again, these percentages are still very, very low. And, you know, I'm not a fan of this particular sector currently, mainly because it hasn't gotten above its 200-day EMA. But the bias is moving bullish in the short term and looks like it will improve in the intermediate term, but intermediate term, it is still bearish. Let's look at another favorite right now. One of the sectors I'm watching very closely is materials. You can see that Silver Cross is at 64% and it's trying to improve, but it's mostly flat. Comparing those percentages to participation, and you see that we have higher readings above the 20, much higher, and above the 50. So the bullish bias in the short term is there because 3/4 of the stocks are above their 20-day EMA. Add to that, there are more stocks above their 50 than the SCI, and that tells us that in the intermediate term, we're also starting to see a bullish bias building in the materials sector. Long-term bias, bullish. The GCI is at 75%, and the percent of stocks above their 200 is at 82%. That gives us a long-term bullish bias for materials. So I think you're getting the hang of it as far as what you do to determine bias in an index. What do you do to determine bias on a particular chart? Let's start with Hess Corporation. All right, so what we want to do to determine bias on a stock or ETF, we obviously don't have a silver cross because we either have a silver cross on a stock or ETF or we don't. You have the PMO gives you some hints, but there is no participation number per se. So really your bias is simply determined by what's going on with price as far as its position above or below its EMAs and what the silver cross or golden cross, depending on what you have here. This has been on a golden cross. So at this point, the bias in the longer term is bullish for Hess, but you can see we do not have a silver cross. We actually had a dark cross of the 20 and 50. So this tells me that in the intermediate term, we have a bearish bias. In addition, price is below both the 20 and 50 and even the 200-day EMAs. So that tells me that Hess currently has a bearish bias. It is in correction mode. And last but not least, before we finish up today, let's look at one that is also in a bearish position. We have a death cross on its way. We already had a dark cross, and price is below all three of those key moving averages. That's a pretty easy read as a bearish bias to this particular chart. And let's go ahead and look at something that is looking a little bit healthier. Here we can see the bias is improving. Currently, the 50 is below the 200. The price is above both of them. So even though we have a somewhat bearish bias in the long term, it is improving and that bearish bias is starting to disintegrate. And you could say that we're on the way to a bullish bias in the long term. We have a silver cross, price above both the 20 and 50-day EMAs. That gives me a short-term and intermediate-term bullish bias. So that's pretty much how you can determine market bias and the bias of even your stocks and ETFs. And this will tell you how confident you can be in your stock picks, how confident you can be in whether the market that you're looking at, that broad market index, has the possibility of a move to the upside or the downside because of that bias. And really, it just comes down to participation when we are looking at the golden and silver crosses versus participation. And then when you come to a stock, it's all about where it is in relation to its EMAs and where those EMAs are positioned. That's all I have for you today. I really enjoyed talking to you about how to assess the bias on broad market indexes, sectors, and of course on your stock or ETF. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.